If you were born before 1966, I need you to stop whatever you are doing right now and watch this video from beginning to end, because what is happening with Social Security in 2026 directly affects you, your monthly benefits, your retirement planning, and possibly the financial security of every person in your household. Over the past several months, significant changes have been made to Social Security rules, payment structures, and eligibility calculations that are specifically impacting Americans in your age group. Changes that the Social Security Administration has not done nearly enough to communicate clearly to the tens of millions of people who are affected. Some of these changes work in your favor, others do not, and a few of them carry deadlines that, if missed, could cost you thousands of dollars in benefits you will never be able to recover. This is not the kind of warning you can file away and deal with later. This is the kind of information you need to act on now. So whether you are already collecting Social Security, whether you are approaching your full retirement age, or whether you are still deciding when to claim, the next few minutes could be the most financially important time you spend today. Welcome to Anderson Report, the channel dedicated to keeping everyday Americans informed about the government programs, policy changes, and financial developments that affect their lives the most. At Anderson Report, we do not deal in political spin or confusing government jargon. We take the most important information, the information that matters to real families and real retirees across this country, and we break it down in plain English so that you can understand it, use it, and share it with the people you care about. Today's warning is one of the most urgent we have ever issued on this channel. Because the 2026 Social Security changes affecting Americans born before 1966 are real, they are already in effect, and the window to take action on some of them is closing fast. So let us get straight into it. Let us begin with why Americans born before 1966 are in a particularly important position right now. If you were born before 1966, you are currently aged 60 or older. That places you squarely in the group of Americans who are either already receiving Social Security retirement benefits, approaching the age at which they can begin claiming, or making critical decisions about when to file. The choices you make in the next 1 to 3 years about your Social Security benefits will determine your monthly income for the rest of your life. And the 2026 rule changes have shifted the calculations in ways that make those decisions more complex and more consequential than ever before. The first major development affecting this group concerns the Social Security full retirement age and the impact of claiming early. For Americans born between 1955 and 1960, the full retirement age is between 66 years and 2 months and 66 years and 8 months. For those born in 1960 or later, the full retirement age is 67. If you claim Social Security before your full retirement age, your monthly benefit is permanently reduced. This has always been the case, but what has changed in 2026 is how the Social Security Administration is calculating and communicating these reductions as part of a broader effort to improve transparency in the system. Many Americans who claimed early in previous years are now discovering that their benefit reduction is larger than they were originally told or originally understood. If you claimed benefits early and you believe your monthly amount may be incorrect, you have the right to request a detailed earnings and benefit statement from the Social Security Administration and to ask for a formal review of your benefit calculation. The second critical issue for Americans born before 1966 involves the Social Security earnings limit for those who are working while collecting benefits before reaching full retirement age. If you are receiving Social Security retirement benefits and you are still working and you have not yet reached your full retirement age, there is a limit on how much you can earn before your benefits are temporarily reduced. In 2026, this earnings limit was adjusted, and the new threshold is different from what many people expected based on prior year figures. If you are in this situation and you are not aware of the current earnings limit, you could be unknowingly triggering a reduction in your monthly benefit without realizing it until you receive a notice from the Social Security Administration demanding repayment of overpaid benefits. That is a situation nobody wants to be in, and it is entirely avoidable if you know the current rules. The third development is one that has generated significant concern among financial advisors and retirement planning experts across the country. It relates to the long-term funding projections for the Social Security trust funds and what they mean for Americans who are currently in their early to mid-60s. The Social Security trustees have consistently reported in recent years that the combined trust funds are projected to be depleted within the next decade if no legislative action is taken. If depletion occurs, Social Security would not disappear entirely, but benefits could be reduced across the board for all recipients. For Americans born before 1966 who are on the cusp of retirement or who are already collecting, this projection raises important questions about whether claiming sooner rather than later might be the right strategy, or whether delaying to maximize monthly benefit amounts still makes sense given the uncertainty. There is no one-size-fits-all answer to this question, and the right decision depends heavily on your individual health, your financial situation, your other sources of retirement income, and your family circumstances. But it is a question that every American in this age group needs to be asking right now. The fourth issue we need to address is the impact of the Social Security Fairness Act and its implications for certain retirees. In recent months, there has been significant legislative activity around provisions that historically reduced Social Security benefits for public sector workers, including teachers, firefighters, and police officers, who also receive a pension from employment not covered by Social Security. Specifically, the windfall elimination provision and the government pension offset have been subjects of intense debate and legal challenge. If you or your spouse worked in a public sector job and you have been subject to either of these provisions, it is essential that you check your current benefit status and stay closely informed about any legislative developments that could affect your payment. Some affected retirees may be entitled to benefit increases or back payments depending on how the situation resolves. And missing the window to act could mean leaving significant money on the table. The fifth and final point we want to make today concerns Medicare, which is directly tied to Social Security for most Americans in this age group. If you are turning 65 in 2026, or if you are already on Medicare, you need to be aware that premiums, deductibles, and coverage rules for Medicare Part B and Part D have changed for 2026. The Medicare Part B premium, which is typically deducted directly from your Social Security benefit payment, increased in 2026, which means your net Social Security check is smaller than it was last year, even if your gross benefit amount stayed the same or increased with the cost of living adjustment. Understanding exactly how much of your Social Security benefit is being deducted for Medicare and whether you qualify for any programs that help cover those costs is an important part of managing your overall retirement income. So what should you do with all of this information? Start by creating or logging into your My Social Security account at ssa.gov, where you can review your earnings record, check your estimated benefit at various claiming ages, and verify that all of your work history has been correctly recorded. Next, if you have not already done so, consider scheduling a free benefits review with your local Social Security office or with a financial advisor who specializes in retirement income planning. And finally, share this video with every person you know who was born before 1966, because the people in your life who need this information the most are often the ones who are least likely to come across it on their own. That is everything for today, and we want to thank you sincerely for spending this time with Anderson Report. The 2026 Social Security changes are real. They are already affecting Americans born before 1966, and the decisions you make in the coming weeks and months could have a lasting impact on your financial future. If Anderson Report has been valuable to you today, please subscribe to our channel and activate your notifications so that you never miss an urgent update. And please share this video widely, post it on Facebook, send it in a text message, show it to a family member over coffee, because there are people in your life right now who are navigating these exact issues without the information they need. One share from you could make a real difference. Thank you for watching. Thank you for trusting Anderson Report, and we will see you in the next video.